U.S. futures slip ahead of the key inflation data. This follows Friday's sell-off after a strong September jobs report raises concerns that the Fed may persist with its stance to slow down inflation. Key indices end sharply lower, led by the Nasdaq. Yields too spike in trade. Stocks in the Asia-Pacific fall as U.S. equities react adversely to strong jobs data. Markets in South Korea, Japan and Taiwan are shut for holidays, while Chinese markets reopen after a week's interval. The SGX Nifty, meanwhile, signals a gap-down start for the Indian market. And crude hits a 5-week high with Brent at $97 a barrel. This after OPEC's decision to cut production is set to squeeze supply in an already tight oil market. The second quarter earnings season kicks off today with IT bellwether TCS set to report its numbers after market hours. The street will keenly watch out for margin and growth forecasts as business environment in key European markets deteriorates. A CNBC-TV18 poll indicates dollar revenue growth of 1.3%. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those were all of the top headlines that we're tracking for you this morning. So clearly we have a lot to get to and we'll talk about all of those individual stories in just a bit. But first up, let's take a quick look at what's happening as far as the global markets go. We did get that weak handover from Wall Street. Once again, U.S. futures are in the red this morning. And on the back of that, you have all of the Asian markets reflecting those losses. Mind you, a lot of the Asian markets are shut today. So Japan, Taiwan, as well as the Korean markets are shut. But we do have rates from Hang Seng on your screen. And you're seeing a sharp cut, over 2% gone on the Hong Kong markets. You also have Shanghai and Straits, which are trading. So those ones are seeing some cuts as well. Straits is down around 0.9%, while the Shanghai markets are seeing some minor cuts right now. So that's what's going down across the Asian markets. Clearly quite a weak start. The SGX Nifty will also come up for you, and it is indicating a weak start, a gap down opening for our own markets. We currently have a 260-point downtick on the SGX Nifty. So that's what's happening across the Asian markets. We're going to keep tracking this, but in the meantime, here is a word coming in from Hugh Young of Aberdeen. So let's listen in to what he has to say on the Asian markets.
There's risk in Asia, but of all the regions, I would say there's probably the least risk. But we've seen major risk in certain countries, Sri Lanka, of course, being the prime example of very high risk. So there are those areas of concern, but fundamentally looking around Southeast Asia, not huge areas of concern. But yes, whatever happens in the US is going to have a major impact globally, and it's hard to be bullish on many macroeconomic factors.
All right, that is an important word coming in from Hugh Young of Aberdeen. But with that, let's also move on and talk about the U.S. markets now. So Wall Street ended Friday's trading session sharply lower. The Dow Jones slid over 600 points after the jobs report. The S&P 500 was down 2.5%, and the Nasdaq Composite closed with cuts of over 3.5%. CNBC's Sarah Eisen is here to bring us up to speed with all of that action from Wall Street.
Here on Wall Street, stocks ended the week with substantial losses. A decline in the nation's unemployment rate reinforced fears that the Fed will have to keep aggressively raising interest rates to bring inflation under control, even if that means the economy goes into a recession. But today's drops didn't entirely erase the strong rally we saw earlier in the week. The Dow ended the day down more than 600 points, more than 2%, although it still managed a 2% gain for the week. The S&P 500 closed almost 3% lower on the day, but still up 1.5% overall for the week. And then there's the Nasdaq, which ended down almost 4% today, got hit hard, still up less than 1% this week. The supply chain problems that have limited auto production, they're finally starting to ease, getting more new cars onto dealer lots. But even as supply is increasing, demand is falling because the Fed's rate hikes are making loans to buy those cars much more expensive. That's the action from the U.S. market. Back to you in Mumbai.
All right, clearly a hectic day of trade in the U.S. markets. All of that showing up in the Asian markets as well, like we've been talking about. But let's stick with the U.S. and also bring you the all-important jobs data that came through. Non-farm payrolls increased by 263,000 for the month of September. And the unemployment rate also fell, and it's currently at around 3.5%. CNBC's Steve Leisman filed this report.
Here's the data, gave you the top line number, 263. 275 was the estimate. So in and around there, not much really to worry the markets. There was the revisions were up 11,000. Average hourly earnings still strong, 0.3%, 5% year over year. It was the unemployment rate, I think, that spooked the market most, 3.5% versus an estimate of 3.7, down from 3.7 was the estimate. And the labor force participation at 62.3. Ticking down, workers not coming back to the labor force. Let's take a look at where the jobs were or are. Leisure and hospitality, 83,000. Healthcare, 60,000. Those are two places where they're still running below pandemic levels. Professional business services, 46. Manufacturing, clocking in pretty good at 22,000. And local government education, teachers come back in September. Could be some seasonal adjustment there, down 22,000. The market may be taking this maybe a bit harder than warranted. A bunch of the job growth, as I was talking about, coming in industries that are still running below their pre-pandemic employment level. For example, leisure and hospitality is down 1.1 million workers compared to the pre-pandemic level. And the headline payroll number, well, it's down for the second straight month to the lowest job gains since April of 2021. Still, the effect of it all was to boost the expectation for Fed rate hikes. Futures markets see the year-end Fed funds rate at 4.36. That's up this morning. And the peak rate in April 2023 at 4.65. That is also up. Even if there are hints of a slowing, a chorus of Fed speakers yesterday made clear they're not looking for subtle evidence of inflation declining. They want clear and convincing evidence over many months. Today's job number does not rise to that occasion.
All right, Steve, thanks a lot for getting us all of that action as far as the jobs market report goes. But with that, let's move on and bring you the final update of our global market wrap. European markets also ended the week on the back foot. So the French CAC index lost over 1%. The German DAX was down around 1.5%. And the British FTSE index closed quite flat with losses of just around 6 points, like you can see on your screen. Now, shares of Credit Suisse closed with gains of over 5%. This after the bank offered to buy back up to 3 billion Swiss francs of debt securities. The Swiss lender also confirmed that it is selling its famous Savoy Hotel in Zurich, prompting some speculation that it could be scrambling for liquidity. Remember, shares of Credit Suisse had hit an all-time low last week after credit default swaps reached a record high. So this is, of course, a developing story, and we're going to keep bringing you updates on it. That's everything that we're tracking globally. But let's now talk about all of the cues that you should track as we get into a brand new trading session and a brand new week. So we have our research team joining in with what the trade setup looks like and everything that you should be tracking in terms of individual stocks as well. Nigel, Vivek and Vahishta all join us now with exactly that. Guys, a very good morning to all of you. And Vivek, let me come across to you first. We've been going through the global market setup, which definitely looks quite weak after the jobs report, but take us through what we should track.
Well, good morning. It appears that this particular Monday you could begin with a deep cut as far as the Indian markets are concerned. When you're talking about the global handover, as we've been mentioning, the global handover has been extremely weak. Most of the US markets ended with cuts between 2 to 4%. In fact, the Nasdaq ending almost 3.8% lower. This is on the back of the fact that the jobs data actually came in much better than anticipated, and this has led to worries that the rate hike tightening could continue on the aggressive path that the Fed has indicated. On the back of this, you actually saw both European markets also go down quite sharply. And in fact, if you're talking about oil prices, another worry as far as India was concerned, rose quite significantly, rose almost 3% to a 5-week high. And this is something that Indian markets would have to be a little wary about. Now, when you're talking about the oil prices were buoyed by the decision earlier last week taken by the OPEC Plus to actually go ahead and make the largest supply cut since 2020. The US Treasury yield too gained almost 6 basis points on the back of the strong jobs data as well. Now, when you're talking about the Asian markets, remember, a lot of Asian markets today are shut for trading. Japan, South Korea, Taiwan, and Malaysia, all of them are closed. China has begun trading after a 1-week break, and Australian markets too are starting trade with a deep cut. The LGX Nifty too indicates that Indian markets are expected to begin trade on a very weak note this Monday morning.
All right, Vivek, thanks a lot for getting us all of those cues. Yes, it looks like we're going to get a gap down start at the opening for the Indian market. So let's see how we really move from there. But let's now also talk about the individual stocks that you should keep on your radar today. And Vahishta is standing by with that entire list. Vahishta.
Hi, good morning, Pavitra. The first stock is IDBI Bank, where the government and LIC shall together be divesting 60.72% stake in the bank. The next stock is Suzlon Energy, where Dilip Sanghvi, who's an investor in the company, shall fully participate in the rights issue. Next is IGL, wherein the company has hiked the CNG price in Delhi by 3 rupees per kilo to 78.61 rupees with effect from the October 8th. For Bandhan Bank, the Q2 update is out, wherein the advances were up 22% and the deposits were also up by 21% on a year-on-year basis. For Hero MotoCorp, the company has launched its India's first fully integrated electric scooter. Also talking about another auto stock, which is Tata Motors. The retail sales of Jaguar Land Rover in Q2 of FY23 stood at approximately 88,000 vehicles, which means that it was higher in China by 38%, in North America higher by 27%, and overseas was also up 14%, but was lower in UK by 7% and was lower also in Europe by 10%. The next stock is Jayaprakash Power Ventures, where there's going to be a board meeting to be held today to discuss the divestment proposals for the Nigri cement grinding unit. And the last is Lupin, where Dr. Kamal Sharma, who is the non-executive VP, has stepped down from the board. This is with effect from October 14th, and Dr. Sharma was on the board for a long period of time, which is 19 years.
All right, Vahisha, thanks a lot for taking us through all of those stocks. We're going to keep all of these on our radar. Also, watch out for TCS, of course, and the entire IT pack, because we will be getting earnings from TCS post-market hours today. So with that, let's also move on and talk about the FNOQs that you should track. And Nigel is here with exactly that. Nigel.
Well, morning, Pavitra. You know, we didn't end very much lower, actually, in Friday's trading session. The problem was the data that came post-market hours. The FIs, they sold big time, more than 2,000 crores odd. And with that sell number, you know, after buying for 3-4 sessions, well, we are seeing a negative flow for the month of October. So that's the kind of ferocity with which they sold on Friday. The DIs, well, they tried to offset, but only around a fourth of what the FI sold is what they could do, roughly around 500 crores of a buy number. On the index futures, well, the FIs, they added longs as well as shorts, and they continue to remain net short on the index. Close to around 80% of their positions are on the short side. Now, on the option side, well, 45,000 seems to be the key reason. Where they are talking about them buying calls and puts, it was roughly around 45,000 a piece. Even on the writing side, it's roughly around 45,000 a piece. No big directional move is what you're seeing with regard to the options data. The broad band for the Nifty, you know, is at around that 16,950 to around 17,500. 17,500 is going to take a big effort actually to get past that level, because we almost went out there in the past week or so. And also, crucial resistance zones come out there, the 20-day MA, the 50-day MA out. The hope is that even though we have very weak global cues, we managed to hold out onto that 100 to around 200 DMA out. The other data points that are coming in, whether it's with regard to Brent crude or even the dollar index, they are making me a little bit cautious. So I think the crucial factors, stability on the rupee, if that comes about, then maybe this trend will reverse. Otherwise, at higher levels, even if we see an intraday bounce, my guess is that it gets sold into. SGX Nifty suggesting a big gap down of around 250 points odd. Back to you.
All right, Nigel, Vivek, as well as Vahisha, thank you very much for joining us and prepping us up for this new trading session. With that, it's time for our first short break on the show. But up next, like we told you, IT giant TCS will report its second quarter numbers after market hours today. So we're going to tell you everything that you should expect after this short break. Hey guys, welcome back. You're still tuned into Power Breakfast, and the big cue today, the second quarter earnings season gets underway with IT giant TCS set to report its numbers post-market hours. Rima is here to fill us in on everything that we should expect. Rima, good morning. Take us through what the street is expecting.
Well, good morning. The street is expecting a dollar revenue growth of 1.3%. In constant currency terms, the expectation is of about a 3.4% revenue growth, pretty similar to Q1. The reason you can see a big difference in the constant currency revenue growth and the dollar revenue growth, the CC revenue growth is much higher, is due to cross-currency headwinds, which is due to the depreciation of the pound, the euro against the Australian dollar. That said, revenue growth for IT companies are expected to be fairly strong, given the large deal momentum, large deal wins that they've enjoyed in the prior quarter. So that should help them clock in good revenues this time. Margins for TCS are likely to expand by 70 basis points. 23.8% is the estimate. But remember, this comes on the back of a low base. In Q1, TCS's margins were depressed by 190 basis points due to wage hike. Profits, according to the poll, should be up about 8%. What's the street going to watch? Well, the street is going to be watching whether the company continues to hold on to its margin guidance of 25% by Q4 of FY23. Secondly, this quarter's revenues are expected to be strong, given that it's a reflection of the deal wins enjoyed in the past. But now that the macroeconomic indicators are deteriorating, what's the outlook on the top line? And in that regard, watch for two lead indicators. One is hiring and the other one is deal wins, and both of them were muted in the quarter one. TCS's exposure to Europe and UK, where there are greater worries about slowing economy, is the highest. So close to about 30% of TCS's revenues comes from UK and Europe combined. Also, finally, since TCS is going to be the first IT company to report numbers, it will set the tone for the IT earnings season, and all indications about next year's growth, the client budgets, tech spending, deal deferrals, all that is going to be very crucial. Back to you.
All right, Rima, thanks a lot for taking us through all of those expectations. Of course, we'll trust you to break down those numbers for us when we do have them. And remember, you can catch TCS MD and CEO Rajesh Gopinathan address the media at the earnings press conference scheduled for 5:30 p.m. today. All right, guys, with that, we're going to get into a short break now. But when we come back, we're tracking all of the cues from the commodity markets. We'll tell you what's going on with crude oil as prices hit a 5-week high. Stay tuned. Welcome back. You're still tuned into Power Breakfast, and let's talk about the commodity markets as promised. Manisha Gupta is here with an update. Manisha, I'm guessing it's all about oil this morning.
Oh, it absolutely is, Pavitra. And what a run-up we've seen in the previous week. They're almost nudging to that $100 per barrel mark yet again. The support clearly comes in from the fact that the OPEC and allies are cutting output by nearly 2 million barrels per day from the month of November. And the OPEC output cuts already are lower, so 1 to 1.1 million barrels per day of an additional cut is what they're talking about. We did see the prices gain up by 15% in the previous week. This has been the best week in 8 months that you've seen in case of the crude oil prices. And we are holding around those 5-week highs in the crude prices, even after that bit of a profit-taking that the Asia is giving out right now. Also, the U.S. inflation data this week is what the markets will watch out for. You also have the Chinese inflation, trade data. All of those numbers are awaited. So this one, yet again, promises to be a very volatile week for most of these commodities.
All right, Manisha, thanks a lot for getting us all of those cues from the oil markets. But with that, let's also bring you the latest on the Russia-Ukraine conflict. Just days after an explosion at a key bridge linking the Crimea and Russia, Russian President Vladimir Putin has accused Ukrainian special forces of what he said was a terrorist attack aimed at destroying critically important civilian infrastructure. The Russian president will also hold an operational meeting of the Security Council today following the bridge explosion. And additionally, the United Nations General Assembly has also called for an urgent meeting to discuss Russia's declared annexation of the 4 Ukrainian regions post the referendum. So that's an important update that we're tracking, and we're going to keep bringing you more on this through the day as well. But with that, we're out of time. The Asian markets, the ones that are trading, are all lower, led by Hang Seng, which is down over 2% right now. In fact, the US futures have also slipped further in the past 30 minutes. The Dow future is now over 100 points in the red. Thanks a lot for tuning into Power Breakfast, your Bazaar morning call after this short break.